So far, your investing journey has had ups and downs. You've had a few good picks and some bad ones. You are listening to the specialists, but the results are average. And it seems you cannot crack the code. And then there's this guy. We all know somebody like that, always having a clear idea of what their next investment would be, always having great results while not being a trading professional. Could they know something that you don't? Well, that's most certainly the case. And in this video, we will explain in detail how to pick a stock that will perform so you too can be that person. In 10 minutes, you will know exactly which filter to use to find stocks adapted to your risk profile. By the way, if you're new here, I'm Josh with Visual Sectors, and our goal is to gather data and help you use it to make better investment decisions. Before diving into practice, we need to review a little bit of theory. Don't worry if you're not very technical yet, we will explain everything. There are numerous approaches to trading, but for this video, we'll focus on 3 classic strategies that represent distinct risk profile. A good portfolio will have stocks of every type, but depending on your risk profile, return expectations, and timeline, you will want to focus on a specific type. Let's start with the first one, value stock. A value stock is a stock currently trading at a lower price than its value. The strategy here is to hold your position for years, if not decades, until the price appreciation increases. This is the least risky type of investment, but also potentially the least profitable. The more aggressive investors who also want a shorter return time should consider focusing on momentum stocks. Momentum stocks are stocks that have shown strong price performance over a recent period. This type of investment bets on the fact that this stock will continue this rapid increase and that the investor will be able to sell before any change. Lastly, for the investor who likes risk, but not as much as the precedent profile, growth stock. Growth stocks are shares of companies expected to grow at an above average rate compared to the market or their industry. Think of technological companies that are on the verge of a breakthrough. With this type of stock, the higher the risk, the higher the potential reward. To start picking stocks, you only need to know these 3 categories. Of course, with experience and more knowledge, you will be able to understand subtler categories of stocks and how to balance your portfolio using them. But let's stick with those 3 for the rest of the video. You need to find the specific companies that will make it to your list of interest. And for that, we use a screener. A screener is an online tool or software application investors use to filter stocks based on specific criteria. There are endless screeners available for free. At Visual Sectors, we like FinViz for its ease of use. If you want to dive deeper into the screener's world, you can also use more sophisticated ones, like Guru Focus. But beware of one thing, the data on screeners is not that precise. Once you have your shortlist, always compare it with the information you can find on seekingalpha.com or tradingview.com. Let's start with value stocks. Remember, value stocks are shares that are currently trading at a lesser price than their intrinsic value. We will have to find companies with solid fundamentals and earnings, but with temporary lower than expected prices. For that, we will look in particular at price to earnings ratio, PE, price to book ratio, PB, lower than average prices, and often attractive dividends yields. To find them, we will select the following filters: market cap at $300 million and over, price at $10 and over, PE under 20, PEG ratio under 1, return on equity positive, EPS growth past 5 years positive. Don't worry if you can't remember everything. We created a cheat sheet for you to remember. Simply download it with the link in our bio. On your screen, you can now observe 41 stocks that match our value stocks criteria, such as Bank of America, Berkshire Hathaway, or Baker Hughes Company. Create your shortlist of stocks you would like to explore and move on to the next research. Let's remember that momentum stocks are the highest risk ones. If you choose to invest mostly in them, you will have to monitor that stock closely. To find them, we will have to look for the following filters: market cap over 300 million, price over $10. Those are our main filters to avoid micro-cap stocks. Then we will add price above 20-day SMA, price above 50-day SMA, 0 to 5% below 52-week high, RSI above 70. With those criteria, we can observe 120 stocks showing strong upward movements, like Dell Technologies or the Cigna Group. And lastly, let's look at the growth stocks. For them, we will look for signs of future growth higher than the average market rate. We can often find them in sectors like technology, biotech, and emerging markets. To find them, we will first use the same 2 criteria as the others. Market cap over $300 million, price over $10. We will then add PE over the market ratio. Right now, this ratio is 25. EPS growth next 5 years over 10%. Sales growth past 5 years over 15%. PEG ratio over 2. And EPS growth past 5 years over 10%. With those filters, we find 46 stocks, including the well-known Adobe and Amazon. Once you have your shortlist, what do? Once you have your list of interesting stocks, you will need to research further information. For that, the easiest way is to go to our platform, visualsectors.com. Yes, of course, you can also gather information from different platforms and compile it into a spreadsheet, but my guess is that you don't have the time to do all of that. But don't worry, you can try it for free for 7 days. You just need your email to register. On our platform, you will search for your first stock. Let's use Amazon for example. Once you arrive on the Amazon stock page, you will see a lot of information. We can see that the stock shows a material gap between its current price, $180.69, and its resistance level at $217.50, with a strong support level at $177.50. A broader range like this might indicate that options traders expect significant price movement, which is what we want to see in a growth stock. If you are not yet completely familiar with that type of analysis, you can also look at our Future Trends widget and follow us on Instagram, where we decrypt specific stocks' potential growth and give you the latest financial news every day. And if you have any specific question, please leave us a comment. Our experts will reply to you as soon as possible. Next week, we will decrypt why everybody is talking about AI stocks and what the future of those stocks could be. Follow us. You do not want to miss it. See you next time.